This video is going to take a look at different trading styles and what timeframes or charts are better suited to those styles. Hello, I'm Peter Martin with Trading 212 in one of our regular looks at general trading tips. Now we've had quite a few people sending us feedback in the comments section asking us if we could just run through a little bit of information about different trading styles, different time charts of timeframes on charts and how those two go together. And I think it's a really good question actually, because I'm always keen to stress the individuality of trading. We're all different people. No two traders are really exactly the same. We have different requirements, different preferences, different needs, different psychological makeups, and therefore the idea of having a one-size-fits-all approach to trading doesn't really make sense. We need to look at ourselves and see, okay, I'm like this is what I'm looking to achieve, this is what's going to suit the way I think, the way that I feel comfortable, and do a bit of experimentation trading wise and find out what works for you. So let's just run through some different trading styles and see generally what's out there and what kind of timeframes or charts might those traders be best off looking at. So we'll start on the long end of the scale. People who sometimes called position players, those that are looking to profit from substantial moves in price in the market that occur over several months. So really we're talking about trend following here. The idea being that if a market, let's say, is moving up steadily over 3, 6, 9 months, if you can stay with that trend and get on the right end of it, the amount of profit that you're going to make over such a substantial move should outweigh what you can make in shorter time frames over the course of, say, a week. Now, what kind of charts might this kind of trader be looking at? Well, really, if you're looking at a trend that lasts 3 months, 6 months, you might be looking as your main chart of reference at a daily chart. Now, often when you're looking at a main chart as the one that makes your trading decisions primarily from, what can also help is to look at a time frame that's an order of magnitude larger. So if you were looking at daily charts to make your main trading decisions, you might also look above at a weekly chart just to give you that wider feel for prevailing forces in the market. Now, one of the good things about long-term trend following is that it's fairly low maintenance. If you're making your decisions based on daily charts, you're not really going to have to be keeping an eye on the market the whole time. You might only need to really sort of do a little bit of maintenance a couple of times a day just to check how things are going, if say you had a stop in place to sort of maintain your risk when you aren't looking. So that's really a pro of this approach. The cons are that when you're trading, when you're in this kind of style, really the trading opportunities are actually going to be rarely quite infrequent. You might not be trading as often as you like, depends on your style. So it suits someone who's very patient, but it also might be better. It suits quite a specific mindset, because often trading strategies that go with trend following are kind of breakout strategies where you see a certain amount of breakout, you jump on the back of it in the hopes that develops into one of these long lasting trends, but more often than not they don't. They break down, which means that it can be quite tough psychologically. So it takes a certain type of mindset to be able to live with the fact that a lot of the time you're trading, you're losing, and then every so often you make a really big profit that outweighs all those losing trades. So it can be kind of rough psychologically. Now, a slightly shorter time frame trading strategy is swing trading. Now, swing trading is similar in a sense to the last one, in that you're looking to catch swings in price in a certain direction. You're looking for patterns that may occur where you're going to get these price moves occurring, but they're lasting a much shorter duration. You're looking for moves that last multiple days, really. So you're looking for several days, for a few weeks. And the advantage of this is that trading opportunities are going to come along more frequently. Now, the type of time frames of charts you might be looking at, there's no hard and fast rule, but you might be looking at an hourly chart all the way through to a 4-hour chart as your main chart for making your decisions, or maybe even a 30-minute chart. And then you'd be looking an order of magnitude above, just to give you that wider picture again. So let's say that you were looking at, say, a 4-hour chart to make your main decisions. You might then be looking at a daily chart to look at the broader trend above that. And moving to a shorter time frame, we have day traders who would typically hold positions for a few hours. Now, a true day trader would be out of their position, as the name suggests, before the end of the day. Now, one of the advantages of this is that it mitigates the risk of breaking news overnight that adversely affects the market and might adversely affect your position if you had one. If you're a day trader and you close out before the end of the day, you can go away, forget about the market, come back the next day and start again. Now, one of the disadvantages of day trading is the high requirement in terms of focus and attention for you paying attention to the market. It's high maintenance. Now, the type of time frames of charts that you might be looking at might be 5-minute charts, 10-minute charts, 15-minute charts typically. And a specialist type of day trader who is in and out even more quickly is a scalper. Now, a scalper is someone who's constantly in and out. It's a high frequency trade, and they're just trying to beat the spread and make a few pips of profit here and there. Obviously, this is the highest maintenance of these different styles of trading. It requires incredible amounts of focus, large amounts of time. You have to be paying attention all the time, because one of a key requirement for this type of trading is to keep a really tight leash on risk management. If you're only making a few pips of profit when it goes right, it goes without saying that you're not going to be able to afford to take 15, 20, 30 points of loss when you get it wrong. So you really have to stay totally focused and keep really tight discipline and really keep those losses in check. Now, just jumping back to swing trading, which sort of can be described as sitting as a happy medium between the two in terms of these pros and cons of how much requirement for time, how high maintenance it is, or how many opportunities it offers to trade. So long-term trading, trend following, that offers infrequent trade opportunities to trade, low maintenance. Scalping and day trading is the higher maintenance end of the scale and really high frequency trades, trading in and out all the time. Swing trading is sort of the happy medium between the two, where it offers you a fair amount of opportunities to trade, still has there's some fairly high requirements in terms of maintenance, but nowhere near as high as, say, scalping. Obviously, what suits you best is, as I said at the beginning of the video, down to the individual. It's horses for courses. You need to look at yourself, see what suits you best. Just some experimentation is probably required, and then adopt the style that you feel happiest with. Well, I hope you enjoy this discussion of the different trading styles and the different time frames that might suit them. If you did, please hit the thumbs up and give us a like. Or if you want to let us know what you think about the topic at hand or suggest different topics for us to discuss in the future, send us a message in the comments section, and we do go through and read every single one. Now, we have lots of other videos available. We do other educational subjects, and we do analysis on different markets like oil and gold and FX and the Dow Jones. The best way to access those is to hit the subscribe button, subscribe to our YouTube channel. And we have new videos coming out on a regular basis. There will be another one coming out this week. If you hit the alarm bell, then you'll get a notification when a new one comes out, and you'll know exactly when to go and have a look for it. Well, that's all from me, Peter Martin, and Trading 212. I wish you the best of luck no matter which trading style you choose to adopt, and I'll see you next time. Goodbye.